There was about $50,000 in credit card debts.
Electricity company, gas company, there are over $20,000 worth of traffic fines.
People are in really vulnerable circumstances. They're overloaded with debt. They're wanting to get a solution.
I think the debt agreement industry is actually doing a really good job.
It was a very money-driven company and the bonuses were very generous.
Been a chef, from pretty much the time I left college. Started an apprenticeship like most people do young, and I love what I do. I was 19 when it started.
Mark Solder lives in Chigwell, Tasmania. He's worked hard his entire adult life. But when he was just starting out, at 19, he did something that almost derailed his entire future.
So I applied for a credit card. I think it started with a $1,000 limit. Started going out with mates, buying new clothes, little trips away, and then start tapping out that first card. And then you start applying for the second card, and it just all sort of just went down from there.
Mark was young, with huge debts he couldn't repay, and too embarrassed to tell those close to him.
I had family that could have lent me the money, but the shame stopped me from asking for that help. And at the lowest point, you'd cry sometimes because you didn't know what else to do.
One thing saved us, a phone call to
Then one day, Mark saw an ad on TV that seemed to offer an easy solution.
Looked at our situation and they tailored a plan for us that's working.
The ad was for a company called Fox Symes. They offer the promise of getting out of debt, and one way they do this is through what's known as a debt agreement.
Just like that, they were debt-free and without having to worry about, a phone call from someone chasing some money.
A debt agreement combines all your debts into one lump sum that can be paid off over up to 5 years. The creditors stop calling as they're getting their money back. And if you stick to the agreement, you won't have to worry about losing big assets like the family home. Mark thought this sounded pretty good, initially.
You ring up and the person I got, female, your best friend, and they sell it as rainbows and unicorns. No mention of, that it is in fact a Part 9 bankruptcy.
The reality is that a debt agreement is a form of bankruptcy. It puts a black mark on your credit rating for up to 5 years, and you could have trouble applying for certain jobs. The weekly repayments can be high, and the company charges its own hefty fees.
Fox Symes only took into account the debt and didn't care that $185 a week was leaving me with nothing.
Mark's debt woes are not uncommon. Australians now have around $2.4 trillion in personal debt. That's about $100K each. Debt agreements are increasingly popular. The market has grown over 9% in the past year.
A debt agreement creates a lot of certainty for the client.
Ben Paris is a board member of the insolvency industry's peak body. He also works for DCS Group, another big provider of debt agreements.
A debt agreement in general has a definitive payment, a definitive time frame in which the person has to fulfill those obligations, and they no longer have to liaise with their creditors. You have a minority of cases where it doesn't work out for the debtor. Debt. Help.
But consumer rights groups say companies are overselling debt agreements and misleading vulnerable consumers.
They say that it's consolidate payments, avoid bankruptcy, rather than saying, well, actually this is insolvency.
Jared Brody heads up the Consumer Action Law Centre. He says debt agreement companies are fundamentally conflicted.
They get paid when they put you into a debt agreement. They don't get paid to offer you other sorts of advice or options. So for example, it might be that bankruptcy is a better option for you, means you don't have to pay back your debts at all, although there are consequences. Or it might be better to negotiate directly with your creditors.
When you call the number on the advertisement, like Mark did, you get put through to a customer service rep. The feed reached out to a number of people who've worked in this role at debt agreement companies. Most admitted they had concerns. Only one would appear on camera.
Individually, you'll have your own KPIs, and then as a team, you would have a team KPI. So there was always pressure.
One thing saved us, a phone call to Fox.
Jenny worked for Fox Symes, the company that signed Mark up to a debt agreement. They're the biggest provider of debt agreements in Australia, but earlier this year they were fined by the financial regulator for misleading advertising. Jenny says it was effectively a sales position.
You would need to have a certain amount of debt agreements per month, and you'd be given a bonus, and that bonus often was, over $1,000.
Jenny says the KPIs and bonuses lead many to aggressively push debt agreements.
You give them all the good things about it, but you really just don't mention too much about the reality of actually being in one.
The feed reached out to Fox Symes for an interview. They declined, but in a statement said they don't push debt agreements and that only 3.7% of those who contacted them agreed to go ahead with one. Ben Paris says while there are KPIs and bonuses, they aren't compromising his industry.
There's a whole process that goes about prior to the person entering into a debt agreement. Most organisations will go through a process where the debtor is informed at least 3 times of the consequences. The case for mis-selling is much less in the personal insolvency space than I think it is in other industries.
But Jenny says at the end of the day, she didn't feel qualified to be sorting out people's finances.
I'm not a qualified financial counsellor, and I'm here talking about this person who's calling up and is putting their life in your hands to make the decisions for them almost.
So if you're struggling with debt and want truly independent advice, where can you go?
The program that I'm thinking of with the fines means that you can cancel the payment arrangement. We can take care of that with the program.
2 years ago, when Susan first walked into this office, she was in a world of trouble. Her husband had walked out, leaving $40,000 worth of debt on her shoulders.
I really, at that point in time, it was only a feeling of fear that I had, nothing else.
She sat down with Maria Turnbull, a financial counsellor with the Salvation Army. This is a 100% free service.
We were able to work through one at a time and negotiate payments that I could afford. There were some credit card debts that were waived after a lot of discussion.
Yeah, I've got a name.
Financial counsellors can negotiate with creditors and work out a payment plan. They can also look at whether or not the original money was loaned inappropriately.
Many times I've called creditors and debt collectors and just said, I'm not happy with how you've been doing this. And I've threatened ombudsman schemes. I don't give up. I will fight tooth and nail for my clients. I will advocate strongly for them.
I was like at the end. I really was. She didn't judge. She didn't do anything. She just said, we can do this together.
Parliament has just passed new laws that are meant to address some of the concerns around debt agreements. The new laws reduce the timeframe from 5 to 3 years and prevent repayments going above what someone can afford. But consumer action groups don't think they go far enough.
There are quite a few loopholes. We are concerned that debt agreement administrators, which can be quite canny with their businesses, will find ways to get around.
Back in Hobart, Mark is now on top of his debts. He just wishes he'd gone about it another way.
I found out afterwards if I'd approached lots of the financial institutions I was involved with, they would have frozen things for me. They would have set up a payment plan. People do get in trouble. Don't be embarrassed and ask for help from the actual people and companies involved.